Good morning and welcome back to the broadcast, Retirement Network. I'm Jeff Snyder. This is Brn Am for Thursday, December 9th, 2021. And our top story today, selecting the right in-plan retirement income product for your retirement plan. Well, joining me now to discuss this and a lot more, Ralph Ferraro is with Lincoln Financial Group. Ralph, it's great to see you again. Thanks so much for joining us on the program this morning.
Jeff, great to see you, and thank you very much. Always a pleasure to spend time with you.
Yeah, it's great to chat with you and the folks at Lincoln. And this is a really important topic, Ralph, retirement income. And we've seen a lot of new announcements, several new product announcements. And I guess my first question to you is, if I'm a plan sponsor or an advisor or consultant, where do I start in getting set to review these products?
Jeff, I think that's a great spot to start. And I'll first open with, though, that we continue to see significant participant interest in all these types of solutions. But what a plan sponsor and advisor need to think about is really look at the variation of products across the marketplace. So if we start at the highest level, right, there's guaranteed versions and non-guaranteed versions of products that are going to generate income for you in retirement. And then we need to look at things from a guaranteed perspective, the strength of the guarantee. When can people start to take income? Liquidity and access to your money is also a really important feature as well. All of these are important considerations in really being able to determine which institutionally designed and priced and scalable solution is going to work best for your plan, because it's so important in order to be able to provide income in retirement, and thinking about what's the most appropriate income solution for your plan.
Yeah.
And these solutions, they really benefit everyone along the value chain. From the participant, just to begin with, right, to think about they have the security of knowing that their savings is going to last a lifetime, which is so important when you think about the whole aspect of retirement savings, I should say, is at the end of the day, the most important outcome is to be able to generate income. So for so many Americans, they want to be able to see that when they no longer receive a paycheck, they're going to be able to augment that income from their retirement savings. And according to our research, these solutions are important to participants to really motivate them to save more, or even to begin to start saving if they had not yet started saving. From a plan sponsor perspective, as you would know as an employer, right, it's most important to be able to have a really strong benefits package, that second paycheck, in order to attract talent and retain talent. And then finally, for the plan itself overall, and really I think where and advisors, they think about all the benefits that I just spoke to and the importance of being able to provide those to their clients and customers. But just by being thinking about retaining assets in the plan longer, as they would be able to be utilized to pay income in retirement, that's going to add some stability to that retirement plan overall.
Ralph, having sat in many fiduciary meetings, this is a topic that keeps coming up over and over again. And you have to know where to start. You've told us kind of the starting point. What about some tools that you can use as a sponsor, tools that you can use as an advisor? Because you've got to be able to sift through all the information that you just outlined. I mean, each product is unique and has, as you said, different guarantees. Maybe doesn't have a guarantee. Maybe invested in a different type of instrument. So are there tools that are available to help with this evaluation process?
There are. And I'll first come back to your point. I absolutely agree. Selecting the solution for the plan and the insurer that might provide that type of guaranteed solution, right? Those are fiduciary decisions. So at Lincoln, we've partnered with Fred Reich and Bruce Ashton, as you may know, right, leading attorneys in our market in the ERISA space, to help us actually update, because they had helped us develop a white paper several years ago, and we've recently updated it to reflect the new outcomes from the Secure Act. And we also have a checklist available at Lincoln on lfg.com/retirement income. And what this checklist does, and these tools, they really provide guidance on the in-plan guarantee options and thinking it through the fiduciary process. So these tools provide a framework that we offer, be able to be used to compare and contrast the various offerings that I spoke about earlier, the types of different solutions in the marketplace, and document those fiduciary decisions. Because I think, as you know, right, documenting your fiduciary process is so important along the way. And it's important to look at all aspects of each solution and ensure you find the one that best fits the needs of your participants. And there's some different aspects that you need to look at, whether it be investment structure, income benefit, fiduciary coverage, and going through those. But I think one of the most important things at the end of the day to come back to is thinking about it as a scalable solution to address the needs of your overall participant base. Right? This is for many participants in the plans, this is going to be their second paycheck after Social Security.
Ralph, you know, a plan is only as good as the people who use it, and using it correctly. Lincoln works with so many different types of plan sponsors. What are some of the, you know, from governments to corporations to not-for-profits to healthcare, and that's just naming the few, that's just scratching the surface. But what are some of the tools and tactics, or I guess tactics, to really get this information in front of participants, employees, to use the plan, use these products correctly so that they're prepared at retirement?
So I think you start with plan sponsors working side by side with their record keeper to ensure that they've got ongoing education that's going to cover all aspects of their retirement plan, including a retirement income solution. So some examples of that here at Lincoln, what we do in our high-tech, high-touch model, where we augment that high touch, is really a representation of the retirement consultants that we make available to meet with participants one-on-one. And we take that framework and we utilize an omni-channel approach, which means that we're willing to meet with participants when and where they want to meet, whether it's online, whether it's over the phone, or one-on-one with the retirement consultant. With in-plan income, it's likely a new option for many of these participants. They haven't seen it before. So this education is even more important. Now, if we pivot from the plan sponsor, the other aspect besides education is to think about plan design. And a plan sponsor has some options here, because a lot of these income solutions are being embedded into qualified default investment alternatives, QDIAs, in particular target date funds. We see target date fund solutions that now provide an opportunity to generate income in retirement. So you might want to set up and make it a default option within the plan and really create a guided solution for the participants in the plan. Or you can make it an opt-in as well. And that's where education and communication is more important in really being able to explain these benefits and values and the features to the participants as they opt in to utilize it. At the end of the day, we can help participants really understand how their retirement plan is more than just a savings vehicle and can now provide guaranteed income so they know their savings can last a lifetime.
Well, Ralph, I need to take a very quick break. When we come back, we'll talk about the retirement life cycle. Is it being reimagined? And also, what is driving participant interest? You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33
Yeah.
years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking this morning to Ralph Ferraro of Lincoln Financial Group. Ralph, thanks so much for staying with us this morning.
Oh, great to be here. Thank you, Jeff.
Yeah, this is such an important topic, and I think it's one that deserves a lot of context, a lot of detailed information. Let's talk about interest from participants, because we talked about what the plan sponsors thinking about the fiduciaries. They're reacting, I would think, to a lot of what their employees and participants are thinking. But let me ask you, what's driving all this interest in retirement income and retirement income products?
So I agree with you, Jeff. Let's start with the participant and then add a couple more thoughts about it from how this is a great tool, though, for employers and plan sponsors as well. But if we start with the participant, our research shows significant interest in these types of solutions. 70% of participants are interested in some type of in-plan investment option that's going to allow them to generate and provide guaranteed income in their retirement. According to our research at Lincoln, nearly 2 out of 3 of these participants see a retirement income offering as a wow factor when looking at job offers. So back to the aspect of being able to attract and retain talent. Half of interested participants also would increase their contribution if a guaranteed income option were available to them. And for those who are not currently participating, again, from the research, if their employer-sponsored retirement plan began to offer it, it'd be a motivation to start saving, as nearly 50% of them said they would more likely start participating in a retirement plan if an in-plan income option was available. Now, from the employer plan sponsor perspective, this is, again, a tool for them in being able to attract and retain talent. It's also a way to help them with older employees really be retirement ready and have a solution so that they can retire on time. And lastly, there's been research done that shows that for the additional years that an employee works beyond retirement, that adds significant 1.5% to workforce employer costs. In addition, recent plan sponsor surveys indicated that 96% of them feel responsible for helping participants generate or manage their income in retirement. And 4 out of 5 of those who do not offer any type of solution today are looking at developing or implementing a type of solution within the next 12 months. So if you take all that information all together, what we're doing then also with financial advisors and consultants is trying to help package and inform and educate them so that they can work with their plan sponsor clients on, again, back to the evaluation aspect of these types of solutions. Because as we said earlier, and a very important fiduciary decision for them.
Ralph, is this, in your estimation, a reimagining of the retirement life cycle, or is this an evolution where people are actually starting to get that this plan isn't about just accumulation? It's about, okay, I've got a 401k or a 403b or a governmental 457, and now I've got to take money out of it. So is it more realization rather than reimagination?
I think you could call it either one, Jeff, honestly, right? An evolution can be packaged up as reimagining. But I think the key aspect of it, first and foremost, is that your retirement plan needs to include a plan for retirement. And that's where it needs to start. Participants have saved carefully throughout their working years, and there's still a concern, am I going to run out of money? What happens if the market goes down? And not having enough money for retirement is the number one source of financial stress for people ages 30 to 49, according to research from Cerulli. Now, for years, as you know, right, we've had the 4% withdrawal rule, that rule of thumb, that given market conditions, the expectation more likely than not, withdrawing 4% from your retirement plan over the course of your lifetime in retirement should last you. You shouldn't run out of money. Morningstar just a couple of weeks ago came out with updated research. That number is now down to 3.3%. So I now think about a lot of guaranteed income solutions that you can offer within plan that have a 5% withdrawal rate, guaranteed for life. 5% is roughly 50% more than 3.3%, which isn't guaranteed. I think that's a really compelling value proposition for advisors, sponsors, and their participants to think about. It's such an important aspect because a retirement plan, as I said, should include a plan for retirement. It provides peace of mind and really eases financial stress.
Ralph, you talked earlier in the first segment about the fiduciary, and I want to ask you about the Secure Act. We haven't heard a lot about the Secure Act because we've been dealing with the CARES Act and a lot of things related to the pandemic, but let's focus on that Secure Act. Does it clear the way for some of those, some of those moments of pause that fiduciaries might have that, prior to the passage where they said, I like the idea of the product, but I'm at risk for being sued, I'm at risk for litigation, what do I do? So does this really kind of clear the way and really kind of make it I don't know if the right word is no-brainer, but I'm going to use the word no-brainer.
I think the Secure Act did a lot of things. And first and foremost, Jeff, right, it expanded the ability for plan sponsors to help participants not only plan for retirement, but also live in retirement. And among the changes, as you point out, were the provisions to increase awareness of and eliminate those barriers to offering guaranteed income products. One of the Act's key enhancements was the fiduciary safe harbor for selecting the insurer of a guaranteed income product, namely the insurance company. And the Act provides a straightforward, easy to satisfy standard for selecting and monitoring the insurance company. And then to obtain the benefits of that fiduciary safe harbor through the checklist process that we talked about and securing a representation from the insurer. Here at Lincoln, we'll provide that on an annual basis. It's a very straightforward representation to easily provide that to the sponsors and provide them with that safe harbor. The last part there, as we talk about landmark legislation, and I think about, let's look at past landmark legislation within our industry and use the 2006 Pension Protection Act as an example and think about the impact that's had on our industry, and then think about what the Secure Act impact may be. So in 2006, when PPA was passed, target dates had been around for a dozen years. They were introduced in the early 90s, but they hadn't really been able to grow that much. But what the PPA did was establish the qualified default investment alternative. We talked about QDIA, and target dates is one of those three options. And since that time, target dates have grown on a compound annual basis 25%. They're over $2 trillion now. I think Lincoln believes that the Secure Act has the potential to transform our industry in the same way. As more people are interested in the financial security that comes with guaranteed income for life, we could see the same long-term growth in the years to come.
Well, Ralph, it's been a great discussion. I tend to agree with you. I think that this is a reimagining and an evolution and I think that participants will be better off for it. Ralph Ferraro, we're going to have to leave it there. Thanks so much for joining us, and we look forward to having you back on the program again very soon.
Thank you, Jeff.
And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives or check out the latest content? Then check out Roku, Amazon, or Samsung, and over 100 streaming smart TV platforms. We're back again tomorrow. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.